whether it stays the same or it increases by 10 times, the planet can sustain that level of energy growth and energy production. I think that's where a lot of people get confused and concerned and scared, thinking that, okay, if human population increases 10x, if human energy consumption increases 10x or 100x, then we're gonna, melt the planet or we're gonna run out of resources. But it's not even close to being true. What's happening in places like California, the utilities in California have a wholesale cost for power, producing power, that might be 3 or 4 cents a kilowatt hour. But through layers of bureaucracy and mismanaged infrastructure, the retail price to the end consumer ends up being 30 to 40 cents per kilowatt hour. So 10 times the actual wholesale cost of production. Because if you're a new Bitcoin data center or a new power generation asset, you're trying to interconnect and sell power into the grid, the companies or the entities that control those monopoly transmission lines are by far the companies that add the most time and cost to your interconnection process. They are the gatekeepers, and they add a year, 2 years or more to the process of building out new load or new generation. And that's just in ERCOT, where the market's pretty good and pretty business friendly.
This podcast is entertainment, not financial, tax, or legal advice. Views expressed represent statements of the speaker in their individual capacity, do not represent the views of Unchained, and should not be considered investment advice. Speakers often have personal, family, or business connections to Unchained, which may include direct financial benefits. Please see our disclosure at unchained.com/podcast.
Hey everyone, welcome back to the Bitcoin Frontier podcast. This week we have on Andrew Myers. Andrew, welcome.
Hey Joe, thanks for having me.
Of course, glad to have you. You recently published Permissionless Power Markets, which is an essay that you wrote. Can you give us a high-level overview of that essay?
Yeah. So I think anyone in your audience, they're going to be somewhat familiar with Bitcoin and the problem that Bitcoin solves in the monetary system, where the monetary system is very regulated. Have a lot of large institutions like banks and the bank regulators that make it very complex and challenging to do business in that arena. And Bitcoin really, decentralizes that and removes a lot of that friction. It's equally as true in the energy industry. So it's one of the most regulated industries in the world. There are a lot of sort of like government sanctioned monopolies that run the thing. I think the opportunity ahead is to continue to deregulate and decentralize that market. So I'm happy to kind of dig into some of the key ideas in that essay, if that works.
Yeah, absolutely. What are some of the key ideas within that thesis?
Yep. So one of them is just like the fundamental idea of markets. So markets are there to find the intersection of supply and demand for whatever good or service is being sold in that market. Electric power markets are no different. They're working to find that intersection of supply and demand. However, they basically have to do that in real time, in perfect balance, in order to keep the grid operating. So I think it's very unique to power markets in that way. But there's a few key challenges that make that harder to do than it needs to be. So one of the biggest ones, I think, is the lack of demand side elasticity. So what that means is you've had, large regulated monopolies for the last 100 years in the energy industry that they basically have been fixing the prices, meaning they offer one price to the end user. And so the end user has not really had an incentive or the means to actually be price responsive. So demand is changing all the time. Supply is changing all the time. Demand is also changing all the time. But they're not actually seeing the real price. So that's somewhere, and I'll just even cut to the solution of that. So like Bitcoin mining, for example, is already coming in and providing demand response in these markets. So they're a very price responsive energy consumer, and they're really going for markets where they can, leverage that flexibility to provide that benefit to the grid in exchange for lower costs. And that's happening across the board too. You're starting to see more even residential and commercial demand response programs that are helping to fix that demand side issue. And it's also going to take more deregulation of the market to ultimately enable that. The second challenge that I see and point out in the essay is the fact that, you have this commodity, which is electric power, that's moving at the speed of light, but then the value transfer, the money to actually pay for that commodity is lagging by days, weeks, or months through traditional banking rails. So, um, if you're trying to keep supply and demand in perfect balance at all times, and you're delivering that commodity in real time, but you're not sure when you're going to get paid or if you're going to get paid, that creates distrust in the system, and so it starts to create the question: if energy prices go really high and you're an energy seller, um, but you don't necessarily know if you're going to get paid, all this credit risk and starts to build up between you and your counterparty. And there's a time value to that money too. So if you're not getting paid for days or months after, then there's opportunity costs that you're missing out on, and then also just inflation over time is eroding any remaining value in that money. Um, and then the third key challenge, I think, is more around operating in a society with sound money versus a society with unsound money like we currently live in. And I think it leads to misallocation of resources, investment in, or lack of investment in the energy infrastructure that we need to actually maintain a robust, resilient power grid. So I see Bitcoin as a solution there, ultimately kind of bringing value, bringing money and decision-making power back into the hands of entrepreneurs and innovators and investors, who can, kind of build out that grid of the future.
Yeah, I really love that third point. You had an interesting quote that was in your essay, and it says, "We will see a growing class of entrepreneurs, investors, and everyday people eager to produce and consume more energy to make their dreams a reality." I thought it was a great quote. And so, like, kind of diving into that specifically, do you think like entrepreneurship or running a business could actually be easier under a Bitcoin standard or running a small business? Like, because you're not competing with governments and large corporations that have, endless cheap money financing?
Yep. Yeah, absolutely. A good example of that would be what's happened in the power generation side of things just in the last 15, 20 years. Um, there have been some regulations that created, for example, tax incentives for renewable energy. And I don't think that I don't I'm positive that the growth of renewable energy has not been because of the tax incentives, but it's made it such that you have to go through the entities who can capitalize on the tax incentives in order to finance a project in a way that is competitive with the rest of the market. So if everyone else is leveraging the tax incentives, and then getting debt through basically two major banks who can capitalize the tax incentives and get cheap debt to finance the projects, if you're not doing that, if you're not playing that game, you're at a significant disadvantage. So I think when we start to move, away from sort of the distortion that those tax incentives cause towards more of a, self-sovereign type of economy, and you have money and value in the hands of people with that sort of sovereign mindset, who are using Bitcoin, that's going to start to shift the wealth into the hands of, for example, large Bitcoin mining companies that are holding thousands of Bitcoin today. And as the value of that Bitcoin grows, they will be in the best position to actually invest in new energy infrastructure.
Wow. Yeah, very interesting. What's the current state of Bitcoin adoption within the energy industry in particular today? Like how has that, progressed over the last, few years? And then how do you see the energy industry getting into Bitcoin mining over the coming decades?
Yeah, I mean, just even taking a step all the way back to the beginning of Bitcoin. So 15 years ago, mining is happening very much at the hobbyist scale on CPUs. That scales up to FPGAs and GPUs, and then ultimately scales up to ASICs around 7, 8 years ago. And so that was kind of the start of the industrial scale of mining, where Bitcoin mining companies, Bitcoin data centers are looking for megawatts of power instead of just kilowatts of power. And I think at that time there were certainly opportunities. Maybe not too many questions were being asked by the utilities or the energy companies. They were just saying, "Yeah, I mean, buy a few megawatts of power and that'll work." But then there was a little bit of pushback there, when those companies were looking to scale, and you had some utilities and municipalities that started to ask more questions and maybe even stop serving that type of load, or there might have been local regulations that started to create issues. But then in the last, I think 4 or 5 years, the industry didn't go away. The demand for power continued to increase even more, and what we've seen there is, from the perspective of Satoshi Energy, we work very closely with the owners of large generation assets and help them sell power to Bitcoin data centers. And it was a big education process. It was a big process. You know, a lot of work went into kind of figuring out which markets make sense, what sort of power contract structures make sense, what locations make sense for Bitcoin mining, and helping to educate those energy companies on how to best sell power to those companies. The biggest question at that time was always around the creditworthiness of the power consumer being the Bitcoin data center. And so there's numerous ways to approach that, numerous ways that we help to educate them and kind of solve for that challenge to make sure that they're always made whole. They're always going to get paid for the power that they're delivering to Bitcoin data centers. And I think that added a lot of comfort. And then in that time frame, there's also been a couple of bull markets with regard to the Bitcoin exchange rate. And it's been interesting to see during the bull markets, the energy companies have started to dig deeper into, okay, maybe I should be investing in this piece of infrastructure, into this Bitcoin data center.
In this frontier moment, Andrew is talking about large energy companies entering the Bitcoin mining sector. Let's recap how 3 well-known energy companies have been participating in the Bitcoin mining industry over the last few years. 1, ExxonMobil. They've been working with a Bitcoin mining company, Crusoe, in North Dakota to turn wasted gas into energy for mining Bitcoin. This began as a pilot project back in January of 2021. Last reported, Exxon was thinking about recreating the pilot project in Alaska and 4 other countries, including Nigeria, Argentina, Guyana, and Germany. 2, Marathon Oil. They're based in Houston and also power co-located Bitcoin mining operations. On their website, it states that they use gas that would otherwise be flared due to the lack of a gas connection or gas takeaway capacity constraints to effectively generate the power for co-located computing and data centers used for Bitcoin mining. 3, ConocoPhillips. They also have publicly stated that they are selling extra flare gas to Bitcoin miners in North Dakota, but they have not disclosed which Bitcoin miner and how much gas they are actually selling. All 3 of these companies have partnered with Bitcoin miners in various ways, but it still publicly is an incredibly small part of their business. But as Bitcoin continues to grow, it appears likely that all 3 companies will focus more resources on Bitcoin mining. And now back to Andrew.
And our advice during those times has actually been, well, you're actually better off kind of, holding off on the investment until, the Bitcoin ASIC price comes down and then the CapEx is a little bit more reasonable than what it is today. But for whatever reason, even these, very intelligent institutional investors are buying high and selling high rather than buying low and selling high. So that said, they continue to want to sell power to these data centers. They're getting much more comfortable with that. I think they've taken the stance, especially with the Bitcoin spot ETF approval earlier this year. There seems to have really been a shift in perspective where it's not like, okay, maybe this industry is going to go away, to where now they think, okay, this industry is here to stay, and how do we figure out how to best serve it? So we've seen a lot more comfort around selling power to Bitcoin data centers and an increasing amount of investment from some of these large energy companies actually directly into the Bitcoin data centers, maybe as a partial equity investment in a project or even a larger investment into Bitcoin, Bitcoin mining as a whole. And even a couple of large energy companies, at least privately at this point, are holding Bitcoin on the balance sheet. They just haven't made it public yet.
Very interesting. Yeah, you touched on the idea that a lot of these energy producers are or at least historically have been somewhat concerned about the credit worthiness of Bitcoin miners. What's been like the concern there? Is it just that Bitcoin is so new, or is it also like just that Bitcoin is super volatile that you never know if Bitcoin falls 50%, this entity miner might just go out of business?
Yeah, it's a little bit of both, but it ultimately comes down to them. And this depends on the type of power contract. So there's maybe 2 flavors of this. One would be what we call an index contract, which is the data center is going to be purchasing, or the Bitcoin data center is going to be purchasing power effectively in real time at a real time price. And so that's a relatively low risk for the seller of energy, as long as they have the right sort of billing cycle. So it basically creates accounts receivable risk. Accounts receivable is an asset. It's good to have that. But if accounts receivable builds up over the course of a month and then that data center goes bankrupt, then that energy company is on the hook for a few $1 million worth of energy. You're talking about a 100 megawatt data center or greater. Um, the so the way to solve for that one is just more frequent billing. Actually, it's been solved in two ways: prepayments for the energy, which is not favorable to the data center. That actually adds a huge cost of capital to the data center for having to make that prepayment. So the way to kind of fix that for both sides is actually to do more frequent settlements, which Bitcoin solves for that in a really fundamental way. The second risk would be more around a fixed price power contract or a hedged power contract. So if the energy supplier or if the energy consumer, the Bitcoin data center wants a fixed price for that energy, they want to hedge over a long enough period of time to keep that price fixed. There's a mark-to-market risk that needs to be accounted for by the seller. So they have to go out and buy that power at a somewhat lower price and to then lock in the price for the energy buyer. So that's a whole different set of collateral that they have to account for and find a way to collateralize or de-risk. So that's been a big challenge. Also for Bitcoin mining companies, that's just a huge amount of USD capital that they could otherwise be using to build out new data centers that I think has prevented those types of hedge agreements and actually kind of cornered the market more towards the index contracts. So yeah, hopefully that kind of summarizes the issue for you.
Yeah, definitely. You talked about having like a 100 megawatt data center or Bitcoin mining facility, and there's even larger ones, obviously, like 500, and I think maybe even 1,000 megawatt at this point. Do you think that that is like sustainable, or is that also like a symptom of what you were like mentioning earlier of like cheap money financing super large scale projects that may not be the best way to go about Bitcoin mining? Or do you think that like the industry is going to grow so much that that's still probably a good idea to be building these types of projects?
I really think that, well, I mean, number one, to build a profitable Bitcoin mining operation, you have to do it with your capex and your opex in mind. And so there are economies of scale to this investment. So the bigger you can build the data center, the lower per unit cost you're going to end up paying for the Bitcoin ASICs that are going to be used in the data center. The lower per megawatt cost of like your data center facility build out and your interconnection is going to be. So absolutely, the scale is helpful and the scale matters. And then also at that scale, it's hard to get low cost power unless you're operating at a big scale, at utility scale, as it's called. I also have the perspective, and maybe we'll get into some of this a little bit. Which, like on a Bitcoin standard, I tend to think that human innovation, human ingenuity is unlocked relative to where it's at today. And whatever amount of energy we're consuming today, call it 100 megawatts for a single data center, that should look like a small amount of energy a decade or 2 decades from now.
Yeah, I definitely wanted to kind of dive deeper into that idea because I tend to agree especially on a long time horizon, humanity is going to get more productive, more efficient, more innovative. Can you like dive deeper into that concept of like why might the transition to a Bitcoin backed energy market make it, make society produce more energy or develop new energy technologies?
Yeah, and it's not just Bitcoin. It's just how humanity operates. Energy, as many people have said, and many people are aware of at this point, especially through the lens of Bitcoin. Energy is just fundamental to the way that we live and the way that we survive and thrive as a species. I think there are different technological tailwinds that are also pushing us towards more energy consumption. So, there's Bitcoin mining is one thing. It's more so using waste energy than actually creating the need for new energy production. But you have, for example, AI computation and the way that, increases human productivity and the amount of energy that we're consuming to do that. And you also have, whether it's high tech manufacturing, or if you think about something like water use, there's a certain amount of fresh water on the planet, but we also have a ton of salt water that, for example, can be desalinated and used for various applications, whether it's, terraforming the desert or even just like serving a large city population that might have water shortages. And desalination is an energy intensive process as well. So, I think as more people kind of start to adopt Bitcoin, start to actually appreciate wealth um, through Bitcoin, then they'll be thinking about things to do with their money, things to do with their time, and those things all take energy.
Yeah, definitely. Yeah, I've seen the chart of like historical energy production either in the world or in the US, and it's like exponential parabolic type uh trends. Like what do you think it looks like over the next few decades? Does that trend of more energy production accelerate? Does it continue at the same pace? How do you think about the speed of ha- the way that this will go about happening?
The Unchained IRA is continuing to break new records. With a Roth Bitcoin IRA, you don't pay capital gains on the appreciation of Bitcoin. Unchained offers a solution. They make it simple for you to set up a Bitcoin IRA while keeping control of your Bitcoin keys. Use code FRONTIER for $100 off and schedule your consultation today at unchained.com/IRA. And now back to the show.
It's yeah. I mean, predicting the future is not easy. Never easy. Uh, I think the most important perspective here is that whether it stays the same or it increases by 10 times, the planet can sustain that level of energy growth and energy production. I think that's where a lot of people get confused and concerned and scared, thinking that, okay, if human population increases 10x, if human energy consumption increases 10x or 100x, then we're going to, melt the planet or we're going to run out of resources. But it's not even close to being true. There's plenty of land and available resources and raw materials to continue, building out our solar production, wind production, nuclear production, gas production to some extent, and other fossil fuels to some extent. To where it's like we don't necessarily have to worry. We don't have to be cautious of that. I think it's more about, how do we find ways to remove the guardrails, to remove the regulations, and to help people see that they can make an impact in the economy. They can actually go out there and create new things, and grow the economy or grow their own sort of impact in the world, and then just see how it plays out from there. But without the concern that we're going to run out of energy, I think that's the limiting factor.
I definitely agree there. Do you have a view on like as we transition to this Bitcoin powered energy grid? Do you have a view on how it will affect like countries or geopolitics or politics in general?
I I think to some extent, Bitcoin, the protocol, Bitcoin, the ethos is enlightening people to the fact that maybe we don't need governments to the extent that they exist or at all. In terms of Bitcoin mining and Bitcoin adoption and how those two will play off of each other, I think we're actually seeing more Bitcoin adoption, Bitcoin mining adoption in the places that are already business friendly, already focused on free markets and capitalism, and self sovereignty. And then you're also seeing some places where there's new political tailwinds that are also speaking to that and trying to make reforms in that direction. And for them, Bitcoin is a tool to do that. So El Salvador is a great example of that. I think there's some positive signs in Argentina, obviously, and then other state level adoption of Bitcoin, where they're trying to deregulate the government in general, remove some of a lot of the bureaucracy in those places, and Bitcoin is just a tool to enable that. So it's kind of happening from both directions. The Bitcoin ethos, I think, is spreading, and that's good, and we want to see that continue to spread and hopefully reach sort of an inflection point where it's spreading exponentially through this next bull cycle. But also you have sort of the top down approach where you have strong leaders coming in and saying, okay, we've been trying socialism for so long, it's not working. Bitcoin is a tool for us to move towards this more like market oriented future.
Yeah, I think like in the grand scheme of things, Bitcoin, like over the last, centuries of, monetary history, Bitcoin adoption is happening pretty fast. For countries like El Salvador or other business friendly jurisdictions, if this trend continues and adoption happens relatively fast, do you think a lot of the world's wealth will end up accruing to jurisdictions that are business friendly? And like if it happens over a span of, a couple decades or so, does that have like major implications? Like, are there major disruptions because of that? How do you think about that?
Yeah, I think that's always been the case. You've had different points throughout history where different parts of the world were more business friendly. You had sort of commingling of different cultures, different types of technologies from all around the world going into one place. I mean, a good example is Silicon Valley through the 60s and 70s and even into the 2000s. It was a business friendly environment. People had the ethos of going out and innovating and building businesses and all of that. I think unfortunately it's taken a turn where obviously California has become a more heavily regulated, economy, and that's actually pushed people out into other parts of the world. So it's a very clear example that's even happened in our lifetimes. Um, it does make sense that as certain economies open up from a regulatory perspective and embrace Bitcoin as one of those tools to enable that you're going to see people flood to those markets. Places like Texas continue to grow. Nashville, from a Bitcoin perspective, and just a relatively friendly business environment from a tax and regulatory standpoint, is growing. Florida, Miami is becoming a tech hub for the same reason. There are some businesses moving to El Salvador. I think it's a little bit too early to see if Argentina is gonna see the benefits of that, but there's certainly a good chance of it.
Yeah, it also seems like, at least my experience with Bitcoin adoption is everyone, tends to get into Bitcoin at the same time, like when the price is going up. Like that, I'd say like that's the key benefit of Bitcoin, the number go up technology. And so maybe all of those jurisdictions will like double down or triple down next bull cycle when the price is actually like going up or surpassing all-time highs. Do you agree with that? Disagree with that?
I think most people get in when it's a bull market for sure. So we'll see how that plays out in the next 12, 24 months.
For sure. This is another topic that you touched on a little bit earlier, but I think it's worth diving into a little bit. How do you see like patterns of energy consumption? How will that change as we transition to this like Bitcoin market? Right. Like right now you said like the demand for energy is relatively volatile, but in the future when Bitcoin miners are potentially a large part of the energy consumption, would they like them curtailing make the consumption of energy more steady over time? Would energy prices be more stable? Would they be less stable and more volatile? How do you think about that?
There's probably a few things impacting this right now. So, we're going from a very centralized monopoly utility type of way of operating power grids, largely using more dispatchable generation like coal and natural gas and nuclear and hydro, to a market where in the last 20 years there's been a lot more deregulation of the market so that buyers and sellers can actually interact in that market, rather than having to only function through this centralized utility. And at the same time, you're seeing more volatility on the supply side with continued build out of renewable energy, solar and wind power. The impact that Bitcoin is having here is that it's both a supply response asset and a demand response asset. So it's, you're operating the data center. You can actually co-locate those data centers with renewable energy so that if there's a surplus of renewable energy at a given time of day when the sun is shining and all of your solar farms are producing a lot of energy, then the Bitcoin data center can absorb that power and reduce volatility on that supply side. And then on the demand side, when prices are high, demand is high, there's demand for that power or power of any type of generation asset, then the data center is able to shut off and minimize volatility on the demand side. I think where we need to continue to see additional improvement in market design and how markets operate is going to be, not just Bitcoin data centers, but other industrial customers, commercial customers, and residential customers also starting to see a real-time price signal and operate more responsibly and minimize volatility again on the demand side. So absolutely, Bitcoin is a key part of minimizing volatility in the power markets. In terms of where price goes for power, I think that the expectation generally is that as society moves back towards sound money, we should see the cost of everything go down. So the real cost of power actually has decreased even in the last 50 to 100 years, but the nominal cost with inflation has gone up. So supply and demand also matters in terms of price, but innovation continues to drive the price down as well. So I tend to think that we'll see power prices and volatility decrease over a long enough time horizon.
Yeah, I agree with that. When it comes to entities interacting with more of a real-time power price, whether it's Bitcoin miners or other industrial entities like you suggested, what's going to be like the catalyst, or how is that going to happen? Like, does government need to come in and make it to where the market is more clear, or does the market just naturally, find, or do entities within the market figure out that, like, hey, like, we need to be using this more real-time power pricing mechanism? How do you think about that?
Um, it's hard to say. If you look back 20 years, the power markets were generally run again by it wasn't even a power market. It was just centralized utilities, monopoly utilities that defined what the price was, and then they would go out and build the generation mix that could meet the peak demand that arose from that fixed price. But you had some large industrial consumers come in during that time and really advocate for wholesale participation on the load side. And those were, well-financed large industrial consumers who needed low-cost energy if they were going to sustain their business operations in those markets. And so they became a very large sort of like public advocacy group in order to reform those markets. And so Bitcoin miners are a new wave of that. And there's a lot of alignment even between Bitcoin data centers and traditional industrial users that are generally in alignment advocating for the same ongoing deregulation or continued deregulation and market reforms that enable more free market participation on the supply and demand side. I think too, at some point, these large utilities start to collapse under their own weight. This basically is happening in California. There was a period of time where people in the Bitcoin community talked about the Bitcoin death spiral and thought that hash rate would go too high and the revenue per per megawatt hour for mining would be too low, and they would just all go bankrupt, and that hash rate would go away. I think that was an insane concept, but it actually, I think, came from the energy industry through a concept that's called the utility death spiral. This is a very real phenomena. So what's happening in places like California, the utilities in California have a wholesale cost for power, producing power, that might be 3 or 4 cents a kilowatt hour. But through layers of bureaucracy and mismanaged infrastructure, the retail price to the end consumer ends up being 30 to 40 cents per kilowatt hour. So 10 times the actual wholesale cost of production. And so in a place like California, where it's very sunny, you've actually seen a lot of homeowners and other people building out solar and battery storage on their homes and just displacing the need for the utility at all. So, and what's interesting about that too is the people who could afford that solar and storage started with some of the wealthiest, biggest energy consumers in those markets. So you're a utility, you have a certain base of customers, your best paying, most creditworthy customers are leaving you to just produce their own power. And what you're left with is people who are already late on their energy bills and can't continue to afford the high energy prices that you're charging them. And that really does create that death spiral where they're going to have to, like, I think these large utilities in a market like that, they're going to have to continue to rely on, subsidies from the government until those subsidies run out themselves.
Wow, that's fascinating and kind of scary, I guess. Um, yeah. You talked a little bit about, or like the idea of, the energy market becoming more free and not being regulated by, various entities like local or national governments. Are there issues with that concept in the sense that, and I'm by no means an energy expert, but like transmission lines, I'm trying to think of like my apartment right here where the energy is flowing and plugging into this computer, and that's why I'm able to talk to you right now. It's like, is the transmission line, and that may not be the correct term either, but is that like a shared resource that prevents other power producers from like, providing me the power? Or is there like, how, like, are there issues with the market being like rather inefficient? Does that make any sense to you?
I can definitely work with that. So the transmission lines are an interesting part of the entire dynamic of the market. So there are people who are advocates for deregulation of supply and of demand. So, meaning the generation can sell power at a market price and the loads can buy power at a market price rather than being beholden to a monopoly utility price. A lot of those advocates will also say, but we need we need publicly managed transmission lines because that's the piece that you can't let a free market solve. It would just add cost or whatever. I actually disagree with that, and I think it's a fallacy to say that that part of the market also can't be deregulated. It's like saying that without the government, how would we have roads? Well, the first roads were built privately. There still are private tollways. The government itself does a very high cost, inefficient way of financing the roads. Maybe for every dollar that you pay in taxes that's supposed to go to roads, like maybe 1% of that actually goes towards building the road, and the rest is just layers of bureaucracy that it's paying for. The same is true for transmission. So even in a market like ERCOT, where it's by far one of the most deregulated, robust power market in the world, the transmission lines themselves are heavily regulated through monopoly entities, even in that market. And that was sort of a negotiation that had to be made when they were deregulating the market, sort of a compromise that had to be made to continue to push forward. Let's not say had to be made, but a compromise that was made. And so what you end up with there is, if you're a new Bitcoin data center or a new power generation asset and you're trying to interconnect and sell power into the grid, that the companies or the entities that control those monopoly transmission lines are by far the companies that add the most time and cost to your interconnection process. They are the gatekeepers, and they add a year, 2 years or more to the process of building out new load or new generation. And that's just in ERCOT, where the market's pretty good and pretty business friendly. If you go to a place like SPP, the Southwest Power Pool, which covers a lot of the Great Plains of the United States, like Kansas, Nebraska, Oklahoma, parts of Wyoming, that interconnection process for new generation is more like 7-8 years, which, if you're trying to make an investment and deploy capital and you're not actually sure if you're going to build it, interconnect that generation asset for 7 to 8 years, makes it really hard to make an investment decision.
Yeah, that's mind-blowing. Is there hope or potential in Texas for like the transmission line monopolies to get deregulated or to enable more competition?
There's always hope. I think there's been some private investments over the last 10 years or so, where some larger private equity investors and energy investors have, for example, bought out portions of that grid and operate it more as a private network. There's what we do with Bitcoin mines currently. We help these Bitcoin data centers interconnect what's called behind the meter of a generation asset.
In this frontier moment, Andrew is talking about this concept of behind the meter in relation to the electric grid and Bitcoin miners. A simple analogy to understand behind the meter is like a farmer, the power producer, deciding whether to sell their food directly to a local composting facility, the Bitcoin miner, or to the broader market, the grid. If the market rate is temporarily very low and the composting facility is willing to pay a higher price, the farmer sells directly to the composting facility, bypassing the market. This direct sale is behind the meter because it occurs before the food reaches the broader distribution system, the grid, ensuring the farmer, the power producer, gets a better deal and the composting facility, the Bitcoin miner, gets the food or energy it needs more efficiently. With Bitcoin mining, this scenario becomes particularly interesting. This composting facility, in the analogy, operates based on the availability of excess food. It's only accepting food when there's an abundance, ensuring waste is minimized. In this model, the composting facility and the Bitcoin miner optimize the use of resources only when there's an abundance. And now back to Andrew.
And in doing so, you're creating what they call a private use network. So it's effectively a private transmission and distribution line by which two parties can bilaterally sell power without having to worry about what the monopoly transmission company says. Um, there's certainly a lot of debate around that and pushback, I think, from those transmission providers. And all of this is ultimately going to depend on, uh, the overall political will of the people, the push for self sovereignty, who gets elected in these states, who gets appointed to the public utility commissions, who gets elected into the state house as a state rep or a state senator, and how do they view this market? Like, do they buy into this? The fallacy that the only way to get more reliability on the grid is by centralizing it and putting it in the hands of the government, or by saying, do we get more reliability and lower costs on the grid by enabling a free market where people can build supply and demand at their own house or closer to their local neighborhood, or build their own power grid and operate on whatever currency they want to operate on? Like there's two schools of thought there, and there's been a lot of people, especially Bitcoin mining companies, pushing towards the self-sovereign approach. But then there's still a lot of very wealthy political forces that are pushing for the more centralized approach still, even in a market like Texas.
Wow, interesting. So I guess that's the future that Bitcoin could help really enable, creating more self-sovereign, self-sustaining, like energy abundant local communities rather than like being reliant on massive grid operators or massive utilities.
Yeah, that's right. And part of this is just the shift in wealth, right? If people of that ethos, that Bitcoin ethos, are storing their wealth in Bitcoin and then ultimately start to reinvest that money into their economies, they can do so in a way that builds out microgrids that connect into local and regional grids. They can build out distributed generation and power storage, modular nuclear reactors, Bitcoin mining as a component of that, to capture some of the surplus energy. All of these things can happen and should happen on a Bitcoin standard. It's more of a question of how long does it take to get there, and what does the world like when that does look like when that does happen.
Yeah, definitely. It's kind of like Bitcoin is, a network in of itself of nodes. Like the power energy industry is kind of a network, I guess, of grids and microgrids and energy producers.
Yeah,
It's kind of
nodes
interesting.
and edges. Yep, very similar concept.
Very interesting. How do you think about the like mining industry as the block subsidy is going to trend towards zero? Like, do you think that that changes a lot of things or a lot of strategies for a Bitcoin miner, or is it still so far away that most people are still focused on like, hey, the price of Bitcoin is going to go up a lot. We just need to be mining as much Bitcoin as fast as possible.
Yeah, there's certainly a race to get hash rate online and get access to power as soon as possible and capitalize on whatever the next bull market looks like, whether it's a short term bull market or just a extended rip to the moon where there's no looking back. But and I've actually kind of seen this shift in the last 5 years or so. My perspective when I started to understand Bitcoin and the fact that Bitcoin is effectively energy backed money, and that what that means is that Bitcoin is going to be powered by surplus energy, not the marginal energy that is needed to power the things that are you know uh, need absolute reliability, like a hospital, for example, or a security system, something that needs to be on 24/7. Um, I also at the time kind of drew this parallel between Bitcoin ASIC production and where the solar PV industry went in the last 10, 15 years. So 10, 15 years ago, the solar PV industry, uh, they were producing more and more efficient solar panels, and kind of there's different companies competing on saying, how do we make a more efficient solar panel to win this market? But then some smarter investors ultimately said, actually, the panels are efficient enough. Let's just produce them at high volume and low cost. And so they don't need to be very efficient as long as they're cheap, because we have plenty of land to deploy them. So the industry basically consolidated at like 15% efficiency, 15 to 20% efficiency for solar panels, started to produce them at high volume, low cost. I tend to see Bitcoin ASICs also consolidating at their current level of efficiency. So the main ASIC manufacturers are going to continue producing high volume, low cost ASICs. And what that means is that overall your CapEx in a Bitcoin mining data center investment will be lower. And if your CapEx is lower, then you require less uptime, less of a lower load factor or lower utilization rate of the data center to ultimately produce a profitable investment. So I think, through halvings, we know the subsidy is going to decrease. We know more competition is going to come into the mining space and drive down the revenue per megawatt hour, and transaction fees. Nobody knows where they'll go, but let's say they stay relatively steady. The revenue per megawatt hour of mining is going to decrease. And what that means is, to get to a low enough power cost, really the only way to do that and mine profitably, I think, is going to be by being more flexible and shutting off more often. So, 3-4 years ago, when we were selling sites, a lot of the mining companies that we spoke to, probably 80% of them wanted a fixed price for power. Now we see more like 80% of them actually are very comfortable and in fact prefer the flexible price. And they went at that time 3-4 years ago from operating at like 97-98% uptime to recoup the investment. So where now they'll say, oh no, we'll operate 80-90% of the time and we're comfortable doing that. And they'll still make a positive return on investment by doing so.
Does that, and this might be the last question before we wrap it up, but does that dynamic make the mining and energy industries become closer together? Like the fact that the miners actually do become this flexible load. So in 20 years, do you agree with that one? But then in 20 years, do you effectively see the mining and energy industries becoming one thing? Like they're not even really separate; they're kind of just the same thing.
Yeah, that's a great observation. I think it does. Right now, if mining is very profitable, the mining company can get away with operating, with the higher uptime and paying a little bit of a premium to the energy company in order to do that. But as mining becomes less profitable, the need to joint venture and align with these energy companies is even more important. So I think we're going to see it from both angles, but ultimately the way it ends up is that you want your generation asset and your load asset, your Bitcoin data center, as close to each other as possible. Probably have some, maybe even a sort of a campus model where you have a very large substation. You've got wind power there, solar power there, battery storage, maybe other types of power generation as well, and your Bitcoin data center. And what that point on the grid is going to be trying to figure out, what the investors and all those and all that infrastructure is going to be trying to figure out, is what is the best use for this electron at a given time. So is the best use for that power that's being produced to sell it into the grid, or is it to store it in the battery and then sell it later onto the grid, or is it to put that power into the data center and mine Bitcoin with it? So we're already starting to see that play out, and absolutely, as mining margins get tighter, the importance of those partnerships increases.
Fascinating, Andrew. This was awesome. I enjoyed talking with you. Where can people go learn more about you and your company, Satoshi Energy?
Thanks, Joe. SatoshiEnergy.com is our website. I'm AC Myers, ACMYERS on X. And yeah, excited. We've got a really exciting year ahead of us. Going to be sharing a lot more about what we've been working on, some of the big mining companies and energy companies that we've been working with. And I think it'll be a really exciting year for the industry.
I love it. And your essay that you wrote, Permissionless Power Markets, where could people go find that if they want to go read it?
Yeah, that is on the Bitcoin Times. Bitcoin Times, they have a Substack. The website there is bitcointimes.io.
Sweet. Yeah, everyone should go check that out. But Andrew, thanks. This was awesome.
Thanks, Joe.